Okay, hi. First in, first out method underneath the periodic system. We just spoke about the perpetual system, and now let's move on to the periodic system, which again is a system that's going to be much less complicated and easier to calculate. But again, it's important to know both, to have an idea of what they are. So, underneath the FIFO method, we remember that it starts with the first layer and we use up the first layer, and then once we use that up, then we move to the next and move to the next and move to the next. The same thing happens underneath the periodic method. It's just that we don't calculate after every transaction. Underneath the periodic method, what we do is we look at how many or what items are sold and what items are left. And we look at the layers, look at everything that happened, and we just calculate our layers and the value of our layers based on all of the information that's presented. So what we do firstly is we look at, gonna have to go down a little, let me just make it a little smaller. Ending units remain the same no matter what method, no matter what um, type, periodic or perpetual. It's still only 95 units that remain from what we purchased and what we sold that's left over. And so we would know that we have 95 units that are left over. We just need to calculate what makes up that 95 units. And here's how I like to think about it, or what helps me to think about it. When we think of these units and FIFO, we have to figure out what layers are left for this 95 units to come from. It's easy to identify it once we do the perpetual system, because if you recall, we ended up using up until this last layer here. And we took 5 out of that, in which we said that was 100 left, it was 95 left over, which kind of represented our ending units. And so if we look at it from that point of view, then what is important to note is underneath FIFO periodic, our in our ending inventory comes from the last layers, because we're saying it's ending, so that's what's left. And the ending inventory units is just the inventory units that weren't sold. And if we started to sell the units from the first units down, then that means what's left is going to be whatever we couldn't sell that was later on. That was one of the last set of items that we purchased. That's all that pretty much stands for. And so therefore, the calculation of the ending inventory in this instance is going to be based on the last layers, times the amount that's outstanding, the amount of inventory that's available, or ending inventory, times the value of that last layer or the last set of layers. In this instance, what we'll find is that there's only one layer that's left. But similar to with the FIFO method, where we can have multiple layers when we're selling it, we can have multiple layers as well in our ending inventory value. Most likely we're going to see this, we may not see this in the next calculation, but just a point to note. The 95 could have come from multiple layers, but in this instance, the 95 only comes from this last purchase, because technically we can take 95 out of this 100 and still be left with something. And so therefore we should know that we wouldn't need to go into any additional layers. Now, if my ending units was, let's say, 150, then I should know that this layer alone is not going to cover the 150 I have left. So 100 would come from here, and the 50 would probably come from this second to last layer. But all we understand, or what needs to be understood about the FIFO method periodic calculation, is that we just start from the bottom and we just go backwards. We go up. Okay? And so therefore, we have our ending units is the 95 units, and the layer that we're going to take it from, this is layered cost, we're going to take it from, it's going to be this $14 here. And so it's going to be $14. So therefore, ending inventory is going to be equal to the 95 units times $14, 13,300. And the cost of goods sold is going to follow the formula that we have here, which is cost of goods available for sale minus ending inventory. Our cost of goods available for sale, we would have calculated that to be the total of the opening balance, 500, plus all of our purchases, the 840, the 525, and the 1400 are what make up the balance here. That's the total cost that we had throughout the month that we were able to sell, because we had that amount of inventory outstanding throughout the month. And so to calculate the cost of goods available for sale, it is going to be equal to the 7,000 minus 1,300, which gives us 6,435. In this instance, we'll know that both methods actually give us the same value. And so that's pretty good. There can be instances where it might differ slightly, but in most instances, they are very, very close to each other. But yeah, this is the first in, first out method for the periodic system. Very simple. It's just understanding the concept that whatever is left as our ending units comes from what we weren't able to sell for that period. What we weren't able to sell for the month would have definitely fallen into this last purchase, because if we bought 100 on the 16th, but that was the last purchase we made, and we were only left with 95, then that means that it has to be 95 of this 100 at $14. And so we calculate that, and of course, cost of goods available for sale minus inventory is our cost of goods calculation, and we should all know that cost of goods available for sale is beginning inventory plus purchases. That's the value, which is where we got all of this from. 5,000 plus the 840 a purchase, plus the 525 a purchase, plus the 1,400 a purchase, which gave us this amount, and we took that away from what we calculated as ending inventory to be cost of goods sold. And so that's the FIFO method of inventory valuation.